All right, then let's get straight into this market picture. Then one has certainly got to look at the record territory that we seem to be having across most of the markets, across the globe, really. It seems that positivity is coming to the fore. More vaccines being put out, of course, across the world. More economies looking to open up very soon, hopefully, once the vaccines do take effect in some way or other. Of course, they're not panaceas. Just having the vaccine doesn't mean that the virus goes away, of course. A whole lot more still needs to be done, but the hope is that you can at least reach some sort of herd immunity and that the global recovery will begin then to come back in earnest. A lot of the markets out in Asia are still trying to find some sort of recovery despite China still being closed for that Lunar New Year holiday. Japan is back into the open swing of things. So too is Hong Kong, and it managed to rise then to 30,746 points. It's pretty much the first time that the Hang Seng has gone past that 30,000 point mark, particularly then in 30 years, in more than 30 years, in fact. So really does bode well for that market picture, and it does tell you that things are still on the up for that economy. Whether it will maintain or have the ability to stay on the up, though, is perhaps the big question mark as investors look to try and find some sort of positive territory across the board here too. 1 4/10% higher as the Shanghai Composite. That was still the last market it was at, of course, when it was open, with the Nikkei then going up 1 1/4%. Negativity, unfortunately, though, out in Europe, the biggest loser being the DAX out in Germany. That's 1/4% weaker in this lunchtime trade, as you can see there from the right-hand part of your screen, the bottom part of that first segment there as well. Let's turn our attention to the local front, though. You're seeing a lot of positivity come through over here. The all share in general going up 0.4%, then now sitting at 67,387 points. Again, more records. They just keep on tumbling. They just keep on going by the seams of things. A lot of that push does come from the resources, which managed to gain nearly 2%. And we'll talk about why exactly, because today we saw the numbers coming out then of the likes then of Glencore, which pushed out some positive data. They're reinstating their dividend, which they closed off for 2020 because they were trying to mitigate any issues or factors that may come through because of the pandemic. But instead, despite having a net loss, they're still going to put out around $1.9 million worth then of dividends. So very interesting there how they managed to put that one out. And that positivity does mean that the resources overall are in the green today. 2/3% higher as well for financials, led by the banks, which are 1/3% stronger. So too then the listed property segment, should I say, they're 1.5% to the good on that front. In terms of companies that have gone higher today, Redefine, Glencore, as I noted, nearly 4% better off. Even BHP reported some earnings a little bit earlier on in the day today. Also seeing that the commodity cycle does seem to be looking a whole lot better, and the fact that prices have continued on their upward trajectory when it comes to commodities does bode well for both BHP and Glencore, which are both diversified miners. So they don't just specialize in just one metal there. In terms of negative stocks, then the likes of SPAR going down today, 6%, a big fall for DRD Gold, who also had their earnings results out today. We'll unpack those in just a moment. With also Sun International getting a bit of weakness there, 2.8% weaker, in fact. Let's get on then to the local currency. We're pretty much flat today against the US dollar, still around 14 Rand and 44 cents against the US dollar. We have been trying to find some sort of strength, I suppose, for the most part, although the picture is actually faced towards the weakness in the US dollar, though, and that's why we're kind of seeing that. That will, however, mitigate that oil price, which seems to continuously rise to levels we haven't seen since at least last year, $63.20 a barrel right now. Platinum is also down around 0.5%, with the gold price pretty much flat. Bitcoin, well, that's only gone up 1.4%, so not too much to write home about, but still sitting just below that 49,000 point mark. Viv Govender from Rand Swiss joins us then live from our Johannesburg Stock Exchange studios then this afternoon as we get to unpack this market picture. Viv, thank you so much for the time. Appreciate it. Very quickly, let's start things off perhaps with those numbers, with the results to have come out. First, BHP comes out a little bit earlier in the morning, and then Glencore. And it seems like things aren't too bad in the mining space.
Yes, I think when it comes to the miners, what you must understand is that most of them operate at pretty good efficiency levels. They aren't really, huge efficiencies to be gained by any of the big miners out there. To a large extent, what they actually are is at the mercy of the commodity prices. So if commodity prices are high, we will see these companies do rather well. If they're low, they're going to be suffering. And over the last year or so, we've seen commodity prices recover quite nicely. You spoke about the oil price. I mean, at one point last year, it was negative. That means people were paying you to take the oil away from them. And right now, it's recovering to levels that we were seeing, close to those we were seeing at the start of last year before the crisis. Oil has, I think, a quite nice trajectory on the way up, and there's some fundamental factors supporting that as well.
Yeah, it bodes well then for Ivan Glassenberg, right, doesn't it? Because he's now leaving, and it just looks like, well, they're back on top. They've now put out a dividend, that's Glencore, and the CEO now leaves under, perhaps a more positive cloud when things haven't necessarily been that great for Glencore over the years, have they?
No, certainly. I mean, the management of Glencore has been paid rather well, and they to a certain extent perform, but not, if you look at just the amounts they've been paid compared to some of the other, executives out there, they're very well paid, and even in the commodity sector. Yes, he's leaving at a high. Like you said, it's not quite at a huge profit at the moment, but it is a nice little turnaround. You must understand, of course, they are also reasonably close to their upper limit of what their debt, ratios is. 16% apparently is where they don't want to get beyond, and they're about 15% at the moment. So they are, still have a large amount of debt, but they do feel comfortable at these levels. Again, I must mention the fact that they are at the mercy of the commodity cycle. If you see commodities rise again like they did last year, this year, the company will be posting even more gangbuster profits next year. But if they don't, we could see a bit of a turnaround.
Is it too risky a company to invest in?
Not quite. I mean, look, if you have an optimistic view of the global economy, a diversified miner is a good way to get into it. They're better probably than the single play miners, because then you have to be correct about the commodity that's going to go up. Whereas, for a diversified miner, the Anglos, the BHPs, the Glencores, and so on, these guys know the market better than you do, and Glencore especially because of their trading division, their trading history that the executives have. They will be able to spot, what's going to be the next, strong commodity, what's going to be the next, rising commodity out there, better than the average investor would, and therefore they should have an advantage when it comes to what to basically, put their resources into, put them, their capital into. It's much more about what the commodity price is than what the actual underlying, functioning of that mine or business is.
Yeah. Speaking of single sort of commodity miners, then DRD Gold coming out with their set of earnings, not looking good by the way that their share price has gone today.
Yeah, look, yes, they did show a bit of improvement coming through in terms of profitability and so on. But understand, they produce less, about 2% less. They produced at a higher cost, but 11% higher cost. But they were saved by a dramatically higher gold price, And again, if you looked at just the operations of the company, less production at a higher cost, you would think, okay, the company would be under a huge amount of cost, profit pressure. But with the commodity price rises like it has over the last little while, gold really benefited it to a large extent from the pandemic fears. People were looking for safe haven, places to park their money while the uncertainty was so high, and therefore gold did well, and therefore DRD did well. Now we've seen gold come down a little bit because some certainty has returned because of the vaccine and because of, like you said, economies are opening up again, and therefore we should expect gold price to be a bit lower for a little while longer anyway, unless we have another shock coming to the system. And that's obviously going to be what's driving DRD's profitability in the future.
Are we getting perhaps the perfect storm for oil? And I say that because you have the Saudis and Iraq again back into some fighting out in the Middle East. That tension remains. At the same time, then of course you still have demand perhaps not staying or not necessarily spiking up, but you also have the continued cut in supply coming through from OPEC. Is that just the perfect storm for the oil price?
Yeah, in addition to that, we have a change in the leadership of the US. And the US, over the last few years, has actually become one of the biggest producers of oil in the world. The shale oil operations in the US have really taken off at a spectacular rate. And if you look at what's happening since the new administration has come into power, they've basically cut back on things like the Keystone pipeline for transporting the shale to refineries or oil to refineries. They've cut back on permits and federal land and so on. And that's going to really hamper the ability of the US to produce oil on the scale it was in the past, which means that not only do we have OPEC basically having more coordination, or OPEC plus with Russia, having more coordination than they had in the past, but now one of the biggest competitors, if not their biggest competitor in the system, that's the US shale producers, are hampered quite strongly. I think oil prices could be looking for quite a nice rally even from here.
I wonder how far that rally will go. Certainly going to be the big question. Viv, thank you so much for the time, though. Appreciate it. Always good chatting to you. Viv Govender there from Rand Swiss, joining us live from our Johannesburg Stock Exchange studio there, helping us unpack this market picture.